Okay.
And he
Nice.
graduates. 1 second. He graduates on April 30th is when he will graduate.
Nice. Well, I know you're proud of him.
I am. I'm very proud of him. It's been challenging because since he left, all we've been able to do is talk to him every 2 weeks. Can't see him, nothing, every 2 weeks. So the only time we're gonna see him is when we go up on the 30th to his graduation.
Yeah.
Yeah. So yeah, man. But all right, hey, so we're live, and I do this every Friday. I tried to pretty much I've been every Friday this year so far, and I'm just trying to bring different information to people who follow me, and of course, I don't want it to be just about homes. I try to make it about a little holistic, make things a little bit holistic. So,
Yeah.
so far this year, I've had on a personal trainer, had on financial, does financial stuff. I had I can't remember, but I had a banker. I had that talked about just military stuff. So I try to have a lot of different people that can help my clients or anybody who follows me.
Absolutely. It's
So
a good
yeah,
network.
I've been knowing you for a long time, obviously. So and we've done business actually right now. Full disclosure, you are my auto. I have my auto with you.
Yep.
So yeah, so I just wanted to get you on so you can talk to the folks. And a lot of time I don't get a lot of. Sometimes there's not a lot of people on the live, but then I take the clips and I push them out, and it still
Sure.
provide benefit.
Yeah. No, I appreciate you having me. I was just kind of brainstorming on just just overview on what would be good for me to talk about and just kind of inform people on. And I know you probably do this all the time, just giving market updates, but I think we probably don't hear it enough with the insurance market. Just kind of where it's been, I'll say the last 5 or 6 years. And I say 5 or 6 years post COVID, because a lot changed after COVID. Um, Carriers were not writing business for a while during and right after COVID. I would say for the 2 year period from 2021 to 2023, a lot of carriers started coming down the pipe with restrictions in place with age of roof and limits of liability and whatnot that you could and couldn't write. Just kind of slowing business down for us. They weren't wanting us to write as much business because their loss ratios were not as good. They weren't. They were kind of struggling with the values of homes going up, the values of vehicles going up, skyrocketing. Used car values went up so much. When somebody gets in an accident, an insurance company is on the hook for 30% higher today on a used vehicle than they were, 5 years ago. So
Right.
all that comes into play. They were paying out more money. They really restricted that for, I'll say, a 2 year period. So a lot of companies quit writing business, I'll say altogether, believe it or not. So they limited the amount of companies that we can write through. So for somebody like myself, who's a broker, we may have 20 carriers that we can write through in a good year. I would say from 2021 to 2023, we may have only had 4 insurance companies that would even write a home insurance policy. To where now in 2026, it's completely flipped. So we're seeing a lot of those carriers that went away have come back to the market. They're starting to write business again, which is good. It's good for everybody. It's good for us as agents to have that option for our clients, but it's also good for our clients because with more carriers, it makes them more competitive. The more carriers that are willing to quote the business, the more competitive it's going to be for you. So that's kind of where we are. Everything's open back up. It's actually a really good time right now in the insurance industry just for that growth. Tennessee's a green state. I can write in Tennessee, Mississippi, Arkansas, Texas, North Carolina. Tennessee is the greenest state, which means they're profitable. And when an insurance company is profitable in a state, they're going to want to grow. So they're going to be a little bit more competitive. And with that being said, it is good for people to look at their coverage every couple of years. A lot of carriers they'll come to the market real hot for a couple of years. They'll be good. Rates are good. Coverage is good. And then, we put them with that carrier, put a client with that carrier, and a year or two goes by and, they have rate changes, or maybe their deductibles changed and they didn't notify the client, but by a letter in the mail, the client may not know. So it's always good to kind of keep an eye on your coverage. I would say at least every 2 years. If you do that, you're kind of ahead of the game, just because there are so many changes from just what I was saying a minute ago. I mean, it's from today, 2 years ago, the market's completely different. So 2 years from now, it could be, a different market than we're in right now, but it's a good market overall. Auto insurance has always been the profitable line. Homeowners insurance is something that a lot of carriers just kind of do. A lot of carriers will want to write the homeowners policy just for people to bring their auto over. We've seen after COVID, which I'm sure you have seen firsthand, with the real estate market going up so much, the values of homes going up post COVID with inflation. Well, we've seen a lot of that with insurance too, because if the value of the home has gone up 30%, well, when they have a claim and their hardwood floors are 200% higher today than they were 6 years ago, the insurance company has to pay for that. So we have seen homeowners insurance from 6 years ago to today, I will say, has gone up about 50%, which has been very eye-opening and shocking for a lot of people to absorb, because a lot of people, are buying a house and they're on a budget and they want to stick to that budget. Well, a couple years later, your home insurance is $1,000 a year higher. It's kind of a tough pill to swallow, but somebody like myself, I try my best to keep that in front of you. Let's review it every year, every 2 years, make sure you're still in the best carrier, the best pocket that you can be, because if you don't stay on top of it, it can get out of hand. So that's kind of the market as a whole. But I did want to kind of hit on a little bit of homeowners, then auto, and umbrella, life. So a little bit on each product. So homeowners insurance, as far as gaps, some of the gaps that we see in coverage or the biggest ones to be concerned about in this area would be for your roof or for water damage. So I know you probably have a lot of clients that when they're buying a house, everything looks good. Maybe the roof's a little older. Nobody really knows the true age of the roof. But it's very important for an insurance company, because if that roof is 8 years old versus 18 years old, that's a pretty significant difference on a homeowner's policy, whether they're going to pay for replacement cost on a roof or actual cash value. A lot of people don't know that when they're buying a house, and I try and explain it to them, especially the clients that are purchasing a home that has a roof that's, let's say, over 15 years old. A lot of carriers are going to give actual cash value on that roof. And we've kind of been taught, just commercials, radio, things we hear as consumers, that all I need to do is file a claim on my insurance and, they're going to pay for my roof. A lot of roofing companies are, beating that into people's heads. Well, to an extent, it's true. But then again, the industry's changed a lot. So you want to make sure you have the right coverage. And wind and hail damage on your roof is by far the number one claim that we see in Tennessee. And, if you have replacement costs on your roof, you're in good shape. The only thing you'd be out of pocket if you do file a claim would be your deductible. Whereas if you have actual cash value on your roof and it's an older roof and you have to get your roof replaced, they're going to diminish that value on the roof. So you might have, let's say your roof's $15,000 and you have a $2,500 deductible and your roof's 17 years old. You might be lucky to get $3,000 or $4,000 for the roof with actual cash value. But if you have replacement cost, they're going to pay a full replacement cost on the roof, put a brand new roof on the house, minus your deductible. So you may only be out $2,500 for the deductible. And a lot of roofing companies, to get your business, will work with you on the deductible. So that deductible is usually not as big of a deal as the actual cash value itself. So that's something with homeowners insurance that I would always ask my agent: do I have replacement costs on my roof, or do I have actual cash value? Water damage. Yep.
Let me ask you quickly before we go a little bit deeper. So pretty much when somebody is going to come to you or to anyone to write a homeowner's policy, that is one of the things that they need to make sure they ask. Don't take for granted. Make sure you ask your agent, do I have replacement or do I have actual cash value, which we call ACV, actual cash value on my roof? What other than the roof, what else do they need to some specific other places they need to ask specific questions about to make sure they are covered properly?
So a lot of companies will or won't cover hidden water damage or mold coverage. That's another big one. With some carriers, we can add hidden water damage. And what I mean by that, let's say, bought a nice house, has hardwood floors in the kitchen. The buyer eventually notices that their hardwood floors are warping under the refrigerator. Well, they pull the refrigerator out, and next thing they know, they have mold all behind the refrigerator. The floors are warped. They got to pull the floors up and clean the mold. And that could be a few $1,000 job. They have to sand and refinish the kitchen, whatever it is. So if you don't have hidden water damage coverage, as bad as it is, that's one of the things that always kind of gets under my skin with hidden water is how do you know to fix it or to get on top of it quickly when you can't see it?
Right.
And, unfortunately, I've had to have that conversation with a few people that have had pretty bad hidden water damage claims. So I always try and just educate my customers when they're calling me about that. And that's a coverage that we can add. So just kind of advising the customer, hey, you need to get replacement costs if you can. You need hidden water damage coverage. Another big one that I see on especially older homes, Germantown, East Memphis, Midtown, is sewer and service line coverage. So we do see that claim often with older homes, tree roots growing in yards and impacting their sewer lines in their yard. Your home insurance does not cover that unless we add that endorsement on the policy. And it's pretty cheap. On a nice $500,000 house, we can usually add that coverage for probably $50 a year. So if I'm running a home policy, if this is my house and I'm insuring my own home, those are the three main things I'm asking about: replacement cost on my roof, hidden water damage, and maybe water backup coverage, and then service line coverage, sewer line coverage. Most carriers are going to give you, replacement cost on your home, replacement cost on your contents inside your home if you have water damage or a fire or anything like that. But those are the three big things that I would hit on.
Okay, cool. That is very important to know, man, because like you said, it's one thing if you get a hail damage and then your roof is 18 years old and the insurance company figure out, hey, the roof is only worth $2,000 and your deductible is $2,500. You on your own. That's right. That's a way to look at it.
Yep. And sometimes you're in that situation, like there's nothing you can do about it. Like if you're buying a house that has an 18-year-old roof and the seller's not going to change the roof, I will at least have that conversation with my client on the front end. Hey, I want to let you know this roof is old. Unless you get it replaced, on your own, you've got ACV on your roof and there's nothing we can do about it. A lot of times if the roof's that old, you can't get replacement cost on it.
Okay.
Most companies will give you replacement cost on a roof that's less than 15. But in Memphis, if you get 20 years out of a roof with the heat, as much heat as we get around here and the wind, you've done pretty well. And a roof's only going to last, 20, 22 years. So 18-year-old roof, you kind of got to expect to have to come out of pocket for at least some of it. It's good the insurance company is still going to pay for a portion of it. And depending on the shape, if it's an 18-year-old roof that looks like it's still in pretty good shape, they're going to pay a decent amount on it. But I do like to educate my clients when they call me, because the last thing, we need to do is put them with a carrier and, a year later they try and file a claim and come to find out there's very little coverage on the roof. It's just easier setting that expectation on the front end. Hey, you're buying a house with an old roof. You're going to have to expect this in the next couple of years. So I try and educate them on the front end. Okay,
that's cool. On homeowners insurance, the buyer usually don't get to set the limits and stuff like that, because other than maybe the deductible, the insurance company generally sets that amount based on materials and stuff like that. Is that correct?
Yeah, so they use a calculator. Most of them use a MSB calculator, which just looks at, year built, square footage, and the amenities in the home. And with some carriers, we can go in and design that to where it's a custom home, or maybe it's standard, more economy. So if you're buying a nice house and say Germantown, and we need to increase the replacement cost, a lot of times it's not a problem to increase it because they're already wanting to overinsure a house to begin with. But we do have a situation sometimes where people will buy, let's say, a 2,500 square foot home in, a certain area, and maybe they're paying 300 grand for it, or let's say 220 grand for it, and the insurance company wants to insure it for 450. Sometimes you can't go below that amount, or we can trim it down as much as we can. But yeah, you're correct. That's the MSB calculator, whatever it comes back at. It's actually a Tennessee law that we cannot go below the calculator. So we can kind of play with that calculator a little bit to help you out, but we can't go below it and still give you replacement costs on the home.
Okay. What's a MSB calculator?
It's just the calculator that most insurance companies use to calculate the replacement cost of the home.
Okay.
Yeah, it's just it pre-fills with every carrier that we have. They have their own, and some of them may call it something else, but several of them call it MSB. And I'm just so used to calling it an MSB because that's what we've used with Liberty for 18 years. It just pre-fills all the number of bathrooms, age of the home, square footage, garage, if it's on a slab, if it's crawl space, those types of things.
Okay, cool. So one of the things that we know what it means when you say replacement of the roof, replace your personal stuff. We know what all that is. But the one that I think usually catch a lot of us, including myself, what exactly does the liability in your policy covers? What all will that liability protect you from?
So liability is, if you think of it as on your home insurance, is personal injury. The way I usually explain it to somebody is I would say the biggest cases for liability that we see are swimming pools and trampolines, or dogs. That's kind of a hot topic. So swimming pools, I mean, if you have a pool and you have people over, you have kids over, somebody gets hurt, it's your property, you're liable for it. So it's actually very inexpensive to increase your liability on your home insurance, believe it or not. I always try and give a customer at least $300,000 for liability on their homeowners, depending upon the value of the home too, and kind of what their auto looks like, the client. I mean, you can bump it up to $500,000 or even $1 million in liability on their home insurance for maybe an extra $15 to $30 a year. It's very inexpensive to increase your liability on your home insurance. So that's going to protect you from any kind of personal injury case on your home. If you have a trampoline, somebody gets hurt, breaks their arm on a trampoline, you're liable. And then, of course, dog bites. Dog bites are actually kind of a common claim as well. Fortunately, I haven't had too many of them, but a dog, if a dog gets out of your yard, it's your dog, and the dog bites somebody, I mean, you're liable for that dog. So that's another reason why some insurance companies will not write certain dog breeds too. There's restricted dog breeds that we can and can't write. So most of them are okay with the dog breeds as long as your yard is fenced and the dog's been spayed or neutered and they've never bitten anyone before. If they fall into that category, we can usually still write them. But if it's an aggressive dog breed, we do usually have to ask that question.
Okay. So in order for the liability to kick in, the event or whatever it is has to have happened on your property? Is there a situation where if it doesn't happen on your property, it can still cover you?
Yeah. So personal injury, it doesn't have to happen on your property.
Okay. What are some examples of
like the dog? Like a dog. If the dog got off your property and bit the neighbor at their house, that would be a liability, a personal injury claim. There are, honestly, any type of personal injury. If you and I are playing golf and I hit a golf ball and I hit somebody upside the head, and they had to take a week or a month off of work, and they sued me because of it. That's a personal injury claim. Believe it or not, that's something that you could file on your home insurance.
Okay.
I'll get into that a little bit more, but an umbrella is something that would probably protect you above and beyond for something like that situation. But that would be something that they would consider for sure. I mean, you could file a claim on it.
Okay, cool. All right, let's talk a little bit about auto insurance, and you can just just anything you think we need to know, and then I'll just ask a question or two as we go along.
Sure. So the biggest thing with auto insurance that we see in the tri-state area is your limits of liability, which is perfect. You just asked me about the liability on the home. The liability on your auto is the most important part of your car insurance. Most of the time when I ask people, what kind of coverage they have, they say full coverage. I mean, we're just trained to think like that as consumers. Like, oh, I got full coverage, I'm fine. Well, what kind of liability limits do you have within that full coverage? Your liability those are the amounts that the insurance company is on the hook for if you are in an accident. So the state minimum in Tennessee is 25, 50, 25. And the max, you can really get 250, 500, 100, and then you can add an umbrella to it. But I'm going to kind of talk about what those limits mean real quick. Okay. So I don't know what the exact number is now, but it's a pretty staggering number of the amount of people that don't have insurance in Tennessee or Mississippi. It's like 35%, maybe a little bit greater than that actually don't have insurance, period, car insurance. On top of that, I would be willing to say that the people that do have insurance, especially in this area, I would say 30%, maybe 40% do carry the state minimums. And it's very inexpensive to increase your liability. And a lot of people don't know that because they don't have an agent to tell them or to quote them the difference. A lot of people just go online with Progressive or Geico or Esurance or whoever they may have, and they buy themselves a policy. And there's nothing wrong with that as long as you know what you're buying. And most people don't understand what their limits of liability are. So if I ever see anybody that has low or lower limits of liability, I'll explain it. So 25, 50, 25, what that means is if you get in an accident, let's say you're not paying attention, you run into somebody on the way home from work today. All right. So you rear-ended them. It's your fault. Let's say there's 4 people in the car. The first number, 25,000, is the maximum amount that an insurance company will pay out per person for bodily injuries. So if that person breaks an arm, hurts their back, whatever it is, has to go to the hospital for a day, a couple of days, whatever, they got 25 grand maximum that the insurance company will pay out per person, 50,000 for the entire accident. So if there's 4 people in that car that are hurt, the most they're going to pay for all 4 people is 50 grand. And then the last number, 25 grand, is the car that you run into. It's property damage. Well, the problem is a lot of cars out there today are worth a lot more than 25 grand, right? You probably can't even go buy a new car for that number. I mean, even a Chevy Tahoe now is 70, 80 grand. So those are the lowest limits that you can legally carry on liability. It's not enough coverage. If you get in an accident and you have those limits of liability, you can get sued if you cause damage by, bodily injury or property damage to the other person's car because they don't have enough coverage. So believe it or not, I'm just going to give you kind of a hypothetical. If you came to me with 25, 50, 25, and you were married, a homeowner, and you had 2 cars and you were paying, let's just say $200 a month with 25, 50, 25, I could probably bump you up to 50, 150, which is double the amount of coverage for probably $15 a month. So it's really not that expensive to double your coverage. So that's a big thing that we see in this area. In my opinion, that's the most important part of your auto insurance, because why pay for insurance when if you get in an accident, it's not enough to truly cover you. You don't want to be liable for an accident. You want your insurance company to pay for it. That's why you have insurance. So carry the correct coverage. That's the biggest thing on auto insurance that we see. just as far as gaps and just the need is just having better liability limits. So I kind of gave you the bottom end of that spectrum, the 25, 50, 25. The top end is 250,000 per person, 500,000 for the accident, and then 100 grand for the car, which you can bump that property damage up even more. But then a lot of people will carry umbrella policies too to protect them above and beyond on the auto and the home for liability. So, if you got an accident, that same accident, you hit somebody, and let's say somebody died in the vehicle, you're liable. That family may sue you. So having those higher liability limits, if you can afford to increase your coverage, if you have teenagers, if you have assets, you need to be carrying higher liability limits because it's very important.
Okay, cool. One of the things that we always look at when we go to auto insurance is the deductibles, comp and collision. And I'm gonna be honest with you, you've explained this to me before, and I usually don't remember, so I usually take your advice on it. So explain exactly what is comp, what is collision, because there's a good chance we know it's not exactly what it sounds like.
Yep. So it, again, kind of comes back to what I was saying earlier about when people say I have full coverage, your liability is like part A, comp and collision is B and C. So comprehensive is going to be for glass breakage, theft, vandalism, you hit a deer, hail damage on your car, tree falls on your car, pretty much anything other than collision, anything you can think of other than collision. Collision is if I get in an accident and I run into you, or even let's say I'm backing out of my driveway and I run over my mailbox. I ran into another vehicle or some kind of property. It's property damage. I ran into property. So collision is me colliding with something else in my car.
Okay.
A lot of times we'll recommend a little bit lower of a deductible on comprehensive than collision. It doesn't seem today like it makes as big of a difference on comp and collision as it used to, carrying a higher deductible. So a lot of times people may have a $500 deductible and they're trying to save a little bit of money, and they ask me what a $1,000 deductible looks like. It's generally not going to save you a ton. It might be, $8 a month or something like that per car. If you have 4 or 5 cars and you have teenage drivers and your premium's high, then carrying $1,000 deductible would probably save you a little bit more. But if you're, 1 or 2 vehicles, your premiums, under $200 a month, it's not going to be a huge difference as far as price goes with changing the deductible and carrying a higher deductible. The biggest thing that we see on comprehensive for deductibles, I would say as a recommendation is having glass coverage, because the number one comp claim that we see is glass, and people just getting little rock pecks or, that spreads into the whole windshield, need to be replaced. Well, that's a comprehensive claim. So let's say you have a $500 deductible. If your windshield's $600, it doesn't really make sense to file that claim. You're only putting $100 back in your pocket, and then you have a claim on your record. But what you can do is ask your insurance provider if they cover glass damage, and if you can get it with a $0 deductible. So some companies will do a $0 deductible. Some companies will do a $50 deductible. There are options to have $0 deductibles or just lower deductibles on glass damage. That's what I would recommend doing as opposed to carrying a lower comprehensive deductible. So like if you're trying to save money, but you still want coverage, and let's say you have nice vehicles like a BMW or a Lexus, those windshields are not cheap. So maybe let's carry $1,000 deductible on comp and collision, but let's put glass coverage on there, because that's going to be the most likely claim that you're going to file. So if you do file that claim, you got a $0 deductible to get that windshield replaced. So that's one we see a lot. That's one I see a lot of calls on with, people on the highway, they get rock chips and having to take their vehicles in. And it's unfortunate. A lot of the vehicles nowadays have to be recalibrated when you get the windshields redone.
Yeah.
So especially the nicer vehicles, and that recalibration has to be done by the dealership, which, dealership's going to charge dealership hours. It's not like Safelite doing it where it's going to be cheaper. So it just jacks the price up. So that's an important ask of your insurance provider. Hey, do I have glass coverage? What's glass coverage going to cost me with a $0 deductible? Or you may be somebody that, you've had over the last 10 years, you've never replaced a windshield. You don't put a ton of highway miles on your vehicle. I wouldn't worry about it. I wouldn't pay for that because the glass coverage is going to cost you a little bit more. It's not abnormal. It's not going to jack your premium up, $20 a month or anything like that. But if it's the coverage you think that would help you, because you typically do get broken windshields more often than the average person, then I would say I would definitely add that coverage on there. But I couldn't tell you the last time I replaced a windshield. So that's something that I don't put on my own policy, but some people do. I have some people that we quote that have 5 to 10 comprehensive claims in the last 5 years, and a lot of it's just glass damage. So that's something that I would definitely ask myself if I need that coverage or not. And if I do, I would bring it up to my agent.
Okay. And I just looked up on Google, and it says that approximately 21 to 24% of Tennessee drivers are uninsured. So you're talking about a fifth. So you're driving on the street and there's 5 people there. One of you don't have insurance, and then I should have looked up, see how many is uninsured, underinsured as well.
Yeah. And that's Tennessee as a whole. Our Memphis area and northern Mississippi is higher than that, unfortunately.
Yeah. And I was one of those people, because when we talked last time, I just had the limits, the legal limits on mine, and we talked about it and was able to increase it. And from this conversation, I'm probably gonna call you to actually look at maybe even a little bit more protection, a little bit more monthly for a whole lot more protection. So
that's right.
Yeah. Absolutely. Yeah. And based on that scenario, can you think of like a situation that you've seen where somebody was underinsured, they had an accident, and they thought, like we said, they had full coverage?
Yeah. I try and do my best on advising my own clients. So as far as hearing if you're asking me like they thought they had full coverage, but they only had liability, I'll be honest, I don't usually have that happen, because that's what we call like a 323, which would be my problem. That's me. That's my fault. Like they thought they had full coverage and I only gave them liability.
Right.
So I don't know that that's ever happened in my career for that instance. But occasionally we do have people that are underinsured that have accidents. And a lot of times I actually don't even hear about it. I might kind of get the gist of it, but I'm not involved in that, because a lot of times they go straight to an attorney. They have to go straight to an attorney because they're being sued. So a lot of times the legal team is the one that's contacted, not me, because they were underinsured and they were in a bad accident. And now the person that they hit is suing them. So that's something that they would probably prefer I stay out of, because, sometimes we'll have people that might email us and ask us certain claims questions and stuff. And then if I reply back, it's in writing. So, they don't really, as far as a insurance agent goes versus, a legal team that's going to be the one defending someone if they are to get sued, they would prefer we stay out of it. So if that does happen, I don't hear about it as much as probably that it does. But I've had a few situations where people have called me after the fact and said, hey, I know I have good coverage, but I need to increase this because I did get a subpoena and I'm getting sued. And like, they just get extremely concerned. And I've had a lot of people that have called and increased their limits or bought an umbrella because they didn't want anything happening in the future. Now, unfortunately, sometimes people do that and it's a little too late. They've already been sued. When I have to have that conversation, well, this is not going to be retroactive. This is not going to help you for the accident, but it'll help you from today on. So if you were to get another accident, this will help in the future.
Okay, cool. So yeah, let's talk about, you've mentioned it a few times, umbrella. What is an umbrella? And what are some of the things to look at if you do get an umbrella? And why should someone get an umbrella policy?
Yeah. So just kind of getting back on what I was talking about earlier, if you have if you have a pool, if you have a swimming pool, if you have trampoline, I have people that have a lot of rental properties. If you have teenage drivers, all those things just add risk to you being insured, right? So you're more risky. If you have three rental properties, you're riskier than somebody like me that doesn't have any rentals, right? I only have one house. You have four houses. You have more liability because your tenant is living in your home. If that tenant gets hurt, your name's on the house, right? And you can create LLCs and all that stuff. I'm not going to get into that, but the umbrella is going to protect you above and beyond what your liability on your home and your auto would cover. So if somebody did get hurt on your property, let's say you had a pool and somebody got hurt, and your liability on your homeowners is, let's say you just had 300,000 for liability on the home and you're getting sued for $1 million. Well, if 9 times out of 10, the insurance company is going to try and settle it outside of court because they don't want it to drag on. The more it drags on, the more everybody's going to have to pay for court costs and all that. So let's say they settle outside of court, but they settle for 600 grand instead of $1 million. Well, you only had 300 grand in liability on your home. Your umbrella would have to kick in and cover the additional 300,000. So same thing works for auto insurance. In order to carry an umbrella, you do have to already increase your liability to that maximum that I was talking about earlier, the 250, 500, 100. Okay. That is industry wide. That's what you're supposed to carry in order to have an umbrella, because they want your auto insurance to be completely exhausted first for liability, and then your umbrella would kick in. So if you have $500,000 of liability on your auto and that's exhausted, then your umbrella could kick in. And you could buy, we have carriers that you can buy anywhere from $1 million to $10 million in liability on an umbrella. I would say the most common umbrellas that we write are under 3 million for sure. Like most people just buy $1 million umbrella, but the more assets you have, the older you get, the more assets you have, the more money in the bank, the larger your 401k, the more you have to lose if you were in an accident like that. So an umbrella is just going to protect your net worth. A financial advisor would tell you to carry as much liability as you need to cover your net worth. So if you do the math in your head and say, yeah, $1.5 million is plenty of liability to cover what I'm worth today, then all you need is $1 million umbrella. But if you have, if you're older and closer to retirement and you've done well and, it's 3 million, then we probably need to give you a $2 or $3 million umbrella. So it's very interesting, just kind of diving into that with people and trying to figure out how much coverage suits them, because let's be honest, you can be insurance poor. We're talking about all kinds of endorsements and additional liability and all this stuff, but at least the more you know about it, the better off you're going to be in that situation when you are shopping or buying insurance, what to look for.
Okay, cool. So to wrap up here quickly, Justin, again, thank you very much for doing this.
Thanks for having me. Thanks for having me.
Hey, no problem, man. So just for auto and home, what are 3 things individual from each one that anybody who sees this should go and check right now to see if you're covered properly on both your home and your auto?
Well, some of them might be something that you have to call and ask your agent about, like the replacement cost on your home, on your roof. A lot of times your declarations page on your homeowner's policy is not going to say if you have replacement costs. That might be something you have to ask your agent about. The auto insurance is pretty easy. If you look at your declarations page on your car insurance, like a lot of people have an online portal that they can see their car insurance, click on bodily injury limits. And if it's 25, 50, 25, that's something you need to be concerned about. When somebody has 25, 50, 25, I always recommend at least bump it up to 50, 150. Good limits are 100, 300, 100, and then a step above that's the 250, 500. So on the auto insurance, make sure you have good liability. On the home, I would say on the homeowners, that is something that's a little bit more apparent with changes over the last 5 years in the market. A lot of these carriers have kind of slid in a deductible change on people, especially on wind and hail. That wind and hail is your roof. So make sure, look at your deck page, look at your deductibles. You know, if it's is it a 1%? If it's a 2%, that's pretty high. So a lot of people may not realize how high their wind and hail deductible actually is. And that's an insurance company, another way that an insurance company is trying to limit that payout on the roof. So look at your deductibles, look at your replacement cost on your home. If you've lived in your house for 10 years and you haven't talked to your agent, which believe it or not, there are a lot of people out there like that. They just, you know, they get it insured and they just let it ride. You know, your house may be underinsured. I talk to people all the time that live in certain areas, nicer areas, that have lived in their home for a few years and haven't looked at their declarations page, and you know their home might be a couple $100,000 underinsured. So check out the replacement cost on the home. If you feel like that's low, that could be something you may want to call about. You know, some of these things are going to trigger rate changes, though. Obviously, if you called your agent and tried to increase your house, you know, replacement cost by 200 grand, your rate's going to go up. So it's one of those things you might want to ask your agent if that's something they can try and rewrite or shop it, put you in a new rating system, something like that, or just call somebody like myself that's a broker and can shop it for you. There's a lot of carriers out there, like, I don't want to name them, but that are captive, to where if you're with a captive company, they can only write through that company. Whereas somebody like myself that can broker, we have numerous companies we can shop it through. And if that company goes up on you 2 or 3 years later and you want to shop it again, let's look at it again. So some good triggers to kind of pay attention to on the homeowners and the auto if you are wanting to review your coverages.
Okay. Yeah, I think it's important that people definitely review when they're coming up for renewal and stuff. Always check, check with the people you're with, just see if, you're underinsured, if you can get it, can get the same coverage for less money, whatever it is. But it's also a good idea to just check it out.
Yeah.
So, yeah.
Real quick, I just want to mention too, I want to hit on it. One of the other most important pieces of business that we do offer is life insurance with people buying a house. A lot of people don't think about it, but if you're buying a house and you're married, you're using both your incomes to pay for the household expenses. What are you going to do if something happens to your significant other? Are you still going to be able to afford it? And unfortunately, in today's world, we see a lot of the GoFundMe stuff, and just, a lot of that is avoidable by having life insurance. And it's very, very affordable nowadays. Life insurance has gotten, believe it or not, life insurance has gotten cheaper. It's cheaper today than what it was 10 years ago. And you'd be surprised that if you're healthy and you're under the age of 50 years old, you would be surprised how affordable life insurance is, especially if you're just trying to protect your mortgage. You're trying to, buy a $200,000, $300,000, $500,000 policy, something like that for, 15 to 30 years. That's something that we try and bring up, and a lot of people look at that as just an additional expense, like that's another bill I have to pay. Mm-hmm. But is it going to really put your family out if something was to happen to you? And I couldn't imagine what my wife would do if something happened to me and we have 2 kids and I didn't have life insurance. Right. They would probably have to sell our house eventually, and not to mention, like, who wants to pay for final expenses, your funeral costs and everything out of your own pocket, or have to borrow that money to bury your spouse? So life insurance is something that's very important. The younger you are, it is super affordable. But just wanted to mention that too, because that's something that it's a good buying time to buy life insurance when you get married, when you buy a house, when you have another child. Job change, things like that. Those are good times to look at it again. And the average consumer buys life insurance 7 times in their lifetime. So don't think that because you bought a policy 10 years ago that you can't buy another one today, or review it and just make sure. 10 years ago, I didn't need as much coverage as I need today. We only had 1 child. Now we have 2. Our household income is different today than what it was 10 years ago. So there's a lot that changes with us as individuals, to where that's a good time to review your life insurance too. So I definitely like to bring that up at when we're talking, especially when people are buying a house. It's a good time to do it.
Right. I agree with you, definitely. What's a rule of thumb of how much life insurance you need compared to your income? Is there such a thing?
Honestly, I don't ever really look at income. I want what you can afford and what you're comfortable with paying. If you need $1 million policy, but you know you don't want to pay for $1 million policy, don't buy $1 million policy, because you're going to take it out, and then a year from now, 2 years from now, you're going to look at it and say, this is an added expense. I can't afford this right now, and then you're going to let it go. Don't do that. Buy something you can afford. I'm always a component of having some is better than nothing at all. If something happens to you today, your spouse is going to be a lot better taken care of if they have a $250,000 policy that you can afford rather than nothing.
Right.
And 250 grand would go a long way. But there are components, not to get into it too much, but for your income, they actually do an income multiplier. A life insurance company will do an income multiplier. So they'll actually only let you purchase so much coverage, but it's usually not an issue unless you're, let's say you're making 30 grand a year and you're trying to take out a $5 million policy. That's a red flag, right? But, for most of us, it's very obtainable to take out as much as you want, as much as you can afford. What I usually do is just ask people how old their kids are, if they have kids, and then, what are you looking to protect? Are you married? What are you looking to protect? Do you have a mortgage? Do you have car debt? How long is this life insurance going to protect your income? Because that's the tool, right? That's what they need you for, is your income, and we're trying to protect your income. So,
Right.
If I ask them how old their kids are, and you have a 14-year-old and a 10-year-old, I probably don't need to sell them a 30-year term, because 30 years from now, their 10-year-old is going to be 40 years old. That's kind of overkill. They don't need to be protected until their youngest is 40 years old. I usually try and shoot for 25 to 30, their youngest being 25 to 30 years old, because if something happens to you and your child's 27 years old, they can take care of themselves, right? They can go get their own job. They're done with school. They're out of your house. But if somebody's in your house and they're 15 years old, they probably still need mom and dad's support financially for at least another 10 years. So that's kind of what I look at, is age of the children. What can you afford? How much do you want? I'll ask them, like, how do you have a number in mind that you want? What's going to make you feel comfortable? And then we'll look at it, all right, price wise. And a lot of times, believe it or not, if it's just a term policy and they're healthy, people can buy more than they thought. So a lot of times it's not people getting as much coverage as they want unless they're unhealthy. And then sometimes we have to go back and make changes if they are to the premium or to the policy after the fact. But we got a whole arsenal of life insurance products that we can help people with. So it's good.
Okay. Man, thank you, Justin, very much. And just may tell anybody who see this and want to reach out to you how they can get in touch with you, who you write with, and how they can get in touch with you.
Yeah. So I give my cell phone number to everybody. My cell phone, my email, all my clients have my cell phone number. I don't give out my office number. So I don't know if you want me to post it anywhere or just say it on here. Or...
Yeah, just say it and then I'll put it in the comments and stuff. Yeah.
Okay, sure. So my cell phone number is 901-246-6998. And then my email is justin.breen@libertymutual.com.
Okay. I appreciate it, man. Any last thing you want to say before we go?
No, sir. Appreciate you having me.
All right, man. Thank you, Justin. Have a wonderful weekend, man. Appreciate you.
You too. Thanks, Keno. Take care, buddy. Bye.
Hey, so yeah, that was Justin Breen. He's been a long time friend and also one of the people that I use. Anytime I'm shopping insurance or anything, I always call Justin. He's one of the people that I use to do that. So reach out to Justin if you want to get an idea of if you underinsured, or definitely if you don't have insurance. Okay, so again, if you're seeing this, you saw it live, or you end up seeing this later on, thank you very much. Thank you very much. Thank you very much. Have a wonderful weekend. And next week, I'm actually going to have a financial advisor on, because this month is financial literacy month. And insurance is one of those things that can protect you financially as well. So there are many other ways. So I'm going to have a financial advisor on next week. I will talk to us about our finances and help our money go a long, long way, much longer than we probably ever thought. All right. So thank you very much. And I will see you guys on Friday for another Fact Friday. Bye-bye.